What's up? Inflation, rice prices, oil prices, the US dollar. What's down? Stock markets. Let's look into some macroeconomic indicators and what this means for our Philippine stocks. My name is Den Slim and welcome to another episode of Monday Market Outlook. So, a lot of market talk last week was around the MPI delisting and the surprise 2 billion purchase of an unknown buyer, which later turns out to be GSIS. A lot of people thought that this was going to throw a monkey wrench into the MPI delisting, but was eventually clarified by GSIS that this was a private buy-in for a stake in Metro Pacific and that they are not opposing the listing. So given that the minimum public float for MPI has gone below 10%, the delisting would proceed, and MPI has extended their tender offer period up to September 19. So if you haven't tendered your shares yet, I highly suggest you do so because it will be much harder to liquidate your MPI shares once it gets delisted, unless it's what you want. Moving on to other news, as expected, last week inflation numbers came in hotter than expected at 5.3%, which is up significantly from 4.7% in July. Now, this marks the break in the 6-month inflation downtrend, which brings our year-on-year inflation number to 6.6%. Now, looking at the breakdown, a large chunk of inflation is from the food and beverage sector with 37.75%, followed by housing, water, electricity, gas, and other fuels. Now, if we look at the blue bar, inflation on other sector actually remained relatively stable, and if we even look at housing and electricity, it even went down 2.5%, with transport with 0.2%. It was really the food and non-alcoholic beverages sector with a big jump on food inflation that caused the 5.3% uptick for August. This is the reason why the president has decided to put a price cap on rice, which is a surprise move considering that price caps are really counterproductive and are not effective in controlling inflation. Now, Basic Economics 101. If you put a price cap on rice, 41 pesos per kilo, if the cost of importing rice, especially with the rising prices of rice worldwide, is more than the 41 pesos per kilos, it doesn't make business sense to operate your business at a loss. Same with rice farmers. If the process of producing rice, even locally, is more than 41 pesos per kilo, again, I'm not going to do business at a loss, right? I'd probably rather plant something else. What? Onions, maybe? So I think the government should really take a second hard look at this policy. While we did have lower inflation for transportation and other fuels, that may reverse next month as we've seen a recent surge in oil prices. Gas prices are up 10.70 to 15.30 per liter in just the last few weeks alone, with a strong possibility of further price hikes because Saudi and Russia has already announced an extension of oil output cuts until the end of the year. Now, if we look at the WTI crude charts, Brent crude is already at $90 per barrel, with US oil at $87 per barrel. Now, with the current uptrend in oil prices, we have to assume that any pullbacks or any consolidations will eventually be met with buy demand. Now, where is US oil headed? Now, let's look at the 2-hour charts to see if we can find some structure here. We could see some form of resistance here at $90 per barrel. See, resistance, and another area, potential area of resistance here at around 93.66. Going back to the daily charts, this consolidation here could lead to a breakout towards the higher resistance levels at $90 per barrel unless we see a reversal where oil prices can go back down to $79 and even below, we could still see oil prices spike up to $93. Now, let's look at the dollar index. The US dollar continues to strengthen as it broke out of resistance at 104.5. As of now, we can see the dollar inching toward 105.86. But beyond that, okay, let's look at the 2-hour charts here to see if we can find some structure for our next resistance levels. Here, we have a bit of resistance here at around 107.1 and another here probably at around 108, right? So if we go back to the daily charts, we could see resistance at 107.1 and 108. What this means for the peso is a possible rally up to 57.50 and even 58 pesos, and who knows, maybe even 59. Now, the problem with a depreciating peso is that our negative balance of trade makes the Philippines more susceptible to inflation as we are net importers. Our trade deficit is currently at $3.92 billion, so we could potentially see input costs go up in the next few months. Now, let's look at the PSEI charts. The index ended last week with a mark-on close push that held the index in between the 6,250 and 6,150 trading zone, closing at 6,222. Now, we continue to see downward pressure for most of our stocks across the board as we continue to see bleak economic outlook. There's still no reversal signs here yet, and we can still see the PSEI potentially break support at 6150 and eventually go down. But so far, the 6150 support has held quite nicely in the last couple of weeks, and we could expect a bit of volatility in the coming days as we wrap up the FTSE rebalancing, which will be finalized by September 15. Now, we could see the same pattern happening here, but as long as we are able to hold support at 6150, we could still trade along this trading band, 6250 and 6150. When we discuss rising oil prices, inflation, the peso depreciation or the dollar appreciation, now we don't mention this just to predict inflation rates and such, but this could also guide us into how these macroeconomic factors will affect our stock picks. When the peso weakens and import costs go up, how does this weigh into the bottom line of the likes of URC, Century Tuna, or DNL? Now, if we look at URC's chart, the stock has been going down because the rise in their manufacturing costs can't be easily passed on to their customers. Now, same with JFC. As rice prices go up, and since most of their ingredients are imported, this could result into lower profit margins if they are unable to raise prices and pass this on to their consumers. At this point in time, how much more price increases can consumers take? Of course, there are some exceptions as we've been tracking a couple of promising stocks lately. We have GT Cap and Monde Nissin. Now, apart from Metrobank, Toyota Motors more than doubled its net income to 8 billion from just 3.2 billion the previous year. Also, Toyota is currently the #1 auto brand with a whopping 47% market share. Now, Monde, on the other hand, while it could be a risky play as we see its price action go down consistently, but at this level, Monde's price is so cheap considering that Monde is one of a few companies that have a moat. Lucky Me is the #1 instant noodle brand with a commanding 97 to 98% market share. Now, if we do have a rice shortage, what do you think is the next food staple for Filipinos? It's Lucky Me, right? On to the global markets. Let's take a quick look at the American Association of Institutional Investors as the sentiment has turned bullish for the markets, with 42.2% of institutional investors starting to believe that the markets will be up in the next 6 months. But at least for the immediate future, let's take a look at the S&P 500 charts. The US market closed the shortened trading week down around 1.2%, closing at 4,461, just a bit above our max pain level of 445. Now, turning on the moving averages, we can see that the S&P 500 sits between the 50 and the 20-day EMA, which is quite a strong support so far. But will this hold this time around? Because historically, markets do experience a double bottom during the August and September months, and we could still see the same trend happening. The next support level here could be at the 100-day EMA area at 4,360, followed by 4,300 if it breaks down from there. But the markets could consolidate this week as investors await the CPI and the PPI numbers this Wednesday and Friday. Now, if CPI numbers come in hotter than expected, which may be a possibility given rising oil prices, we may see sentiment shift to a higher probability of a Fed rate hike. Now, if we look at the 2-year yields and the 10-year yields, we are very close to possibly breaking a very critical zone here at 4.36% and at 5.1%. Now, the last time rates were beyond this line goes all the way back to 2007, right before the housing bubble. See? Here. Now, as US interest rates go up, this is the reason why the US dollar continues to strengthen. And with the possibility of further rate hikes, we could be seeing the DXY push to 107 or 108, which in turn, going back to the USD PHP exchange rate, translates to 57, 50, 58, or even 59. For this week, CPI data will come out on Wednesday, followed by the producer price index on Thursday. Retail sales and initial jobs data will also give us a sense of how the Fed will decide on November and December. Now, let's take a quick look at historical performance of the S&P 500 in the last 70 years. This area here could be the drawdown last week. And could we be trending a bit upwards before we hit this area here where we start to see a further drawdown of around 0.8%? Now, why are the last 10 days of September such a negative time for the markets? It is during this time that we head into what's called the quad witching event, which only happens 4 times a year. This is when all 4 of the options expire, and the September quad witching event is usually the most brutal one. Now, this is when stock index futures contracts, single stocks options contracts, options on stock index futures, and the options on the stock index all expire at the same time. So, if we look at the options expirations, we have a massive 4.2 million options expiring on September 15. Maximum pain here is at 440, with the call wall sitting at around 450 and 430. If we go back to the S&P 500 charts, let's adjust the lines here. So we have 430 and we have 450 with maximum pain sitting at 440. So 440 is here, right? So based on historical performance, we are indeed on track for a potential bottom. So if we draw a trend line here, right, we could be headed towards the 100 EMA in the next few days. And while we always say that historical movements don't necessarily mean that this will happen in the future, we will just have to see. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Manage your risk accordingly. And I'll see you again next week. Bye-bye.